All right, let's get right into this. I want you to picture something. You've got a major global market, and it's on an absolute tear. I mean, it's just hit a spectacular all-time high after a year-long rally. Billions of dollars are flying around, and then, poof, complete silence. The market is just frozen, halted, right at its absolute peak. Today, we're going to unpack one of the biggest market mysteries in recent memory.
So this is the moment it all went down. On the morning of November 28, 2025, right at the top of the trading session, the COMEX, the main exchange for silver futures, it just stopped. Cold. For about an hour, all activity was completely frozen, leaving traders and investors all over the world just staring at their screens, completely blindsided.
And that, of course, brings us to the big question. What in the world happened? Was this just some simple technical glitch? A computer error? Was it an automated safeguard that kicked in? Or, as a lot of people suspected, was it something else entirely? We are going to break it all down, piece by piece.
Now, to really get why this halt was such a shock, you first have to understand the pressure. This did not happen in a vacuum. Nope. It was more like the explosive release of forces that had been building and building for the better part of a year. The whole market was a powder keg, and it was just waiting for a spark.
And this number right here, this is the force we're talking about. An 80% gain in less than a year. That is an absolutely massive, just an explosive move for a major global asset. I mean, that's the kind of performance that screams a fundamental shift is happening as a total tidal wave of money flooded into this high-quality, tangible asset.
So, why the sudden flood of money? Well, it really boils down to silver's unique split personality. See, on one hand, it's this indispensable industrial metal. You literally cannot build our modern green energy and tech world, solar panels, EVs, 5G, without it. But on the other hand, it's a classic safe haven asset. It's real money that people run to when they lose faith in paper currencies. And in 2025, both of these drivers were firing on all cylinders.
So what happens when you get surging demand from both industry and investors for the exact same high-quality physical good? Well, you get a perfect storm. The market was being squeezed from two completely different directions, and that put an immense strain on the available physical supply. And here's the raw, kind of brutal math behind that squeeze. For 2025, the world was on track to consume 206 million more ounces of silver than every single mine on the planet could produce. Now, that isn't a small gap. That's a colossal structural deficit. It meant the world was literally draining its already thin stockpiles just to keep the lights on. And that deficit was hitting hardest over in Asia. The registered silver inventories at the Shanghai Futures Exchange, which is a critical hub for physical metal, were down a jaw-dropping 85% from their recent peaks. China, a massive industrial consumer, was literally running on fumes, almost out of available silver. Okay, so with that immense background pressure set, let's zoom in on the timeline. We're going to see how this all came to a breaking point in those final few days and hours right before trading just stopped.
You can just see the rapid escalation here. Back in October, some trade war news pushed silver to a new peak. But the real launch pad, that was November 27th. That shocking news about plunging inventories in Shanghai sent their market closing at a record high. And that set the stage perfectly for the COMEX to follow. And sure enough, as soon as it opened, the price just blew past $55, and that's exactly when everything went dark.
As you can imagine, an unprecedented event like this, it triggered a massive wave of reactions. The market instantly fractured, with all these competing theories popping up about what was really going on behind the scenes.
Just so we're all on the same page, let's quickly clarify what a trading halt even is. It's basically the market's timeout button. Exchanges have these mechanisms. They're often called circuit breakers, and their job is to pause everything if prices move too far, too fast. They can also be triggered by technical glitches, but the context here is everything.
We can really look at what happened in three different layers. So you've got the official story from the exchange, which was a technical issue, and hey, that's plausible. A more likely reason is that the sheer speed of the move triggered those automatic circuit breakers. But given the high-stakes timing of it all, a third theory just took hold instantly online, that this was an intentional act of manipulation.
And this quote, this really captures that third theory perfectly. It's a sentiment held by a lot of longtime silver investors. For them, a halt at the exact moment of a historic breakout? No way that's a coincidence. They saw it as a deliberate intervention, an emergency brake pulled to stop the rally before it could truly get away from them.
This post, on the other hand, it perfectly sums up the other dominant emotion, just pure shock and utter confusion. I mean, even seasoned traders who live and breathe these markets were caught completely flat-footed. A halt during a record-breaking run is incredibly rare, and it left everyone just scrambling for answers.
So all of this brings us to the multi-billion-dollar question, right? Where does silver go from here? Was this halt just a dramatic speed bump on the road higher, or was it a genuine turning point? You've got two very different paths that could unfold. Okay, let's break down the two camps. The bull case is that this halt is the ultimate validation. Proponents of this view believe that the overwhelming demand for high-quality physical silver is finally breaking the paper market. You know, that whole system of futures contracts that determines the price. So if the price can just hold above that crucial $55 level, they see a clear shot to $60 and beyond. The bear case? That the halt marked a speculative top, and a mad rush for the exits could trigger a cascade of selling all the way back below 50.
And that brings us to the crucial question that this entire event leaves us with. And it's a question with consequences that go far, far beyond just the price of silver.
So what was this? Was it all just a temporary technical hiccup in a market that had incredibly strong winds at its back? Or was it a serious warning sign? A signal that the world of paper contracts is finally starting to crack under the immense strain of overwhelming demand for a real, physical, high-quality asset in the real world? The answer to that question? Well, that's what the entire market is now waiting to find out.